Morning student, in this video we will discuss about goodwill and its various methods of valuation of goodwill. Actually, goodwill, we are already familiar with this term. Goodwill is a refers to good name, reputation and connection of a business. It is the attractive force which brings in customers. It is one thing which distinguishes an old established business from a new business at its first start. Means if a firm is earning more than its expectation, it is just because of its good reputation, good name in the market, that customers are willing to pay more. Now, why the valuation of goodwill is arises? There are some cases, some situations when there is a need to calculate the value of goodwill. Actually, we don't purchase this asset; it is automatically generated due to the efforts, good management, good services. The value, reputation in the market increases. So we what exactly the value we will charge due to arising in this situation. For this we have to calculate the value of goodwill. When there is a change in the profit sharing ratio, when a new partner is admitted, then also value of goodwill is to be required. When a new firm retires or dies, his share of goodwill is to be paid to retiring partner or deceased partner. And when partnership firm is sold to the another firm, then firm charges the value of goodwill. And when two or more firm amalgamated, they also value the goodwill. When a partnership firm is converted into a company, so these all are the situation when the goodwill of valuation of goodwill is arises. For this we have to calculate the value of goodwill. There are two types of goodwill. First is purchased goodwill and another one is non-purchased goodwill, that is self-generated goodwill. Purchased goodwill we can see when business are taken over by firm which the firm has paid consideration in cash or kind. For example, when business is purchased and purchase consideration is more than the value of net assets, that is assets minus external liabilities, the difference amount is the value of purchased goodwill. That we have already passed the opening entry in class 11th. If the differences comes in the debit side, it is denoted as goodwill. While adding all the assets and deducting the liabilities, the differences we denote it in the debit is goodwill. So this way you will calculate the value of goodwill, purchased goodwill, and extra you are paying just because for the goodwill. As self-generated case, goodwill which is not purchased for consideration but it is earned by the efforts of the management or by the partners. It is an internally generated goodwill which arises from a number of factors such as favorable location, efficient management, good quality of product that a running business possesses, due to which it is able to earn profit. So it is a self-generated profit and self-generated goodwill. For this, as per the guideline given by Accounting Standard 26, that if the goodwill is self-generated, then no need to involve or open goodwill account. It is not maintained in the books of account. So that we will later on discuss. If there is no purchase consideration paid for the goodwill, that is non-purchased goodwill, what treatment you will do in partners capital account. But you must remember this is a case of non-purchased goodwill and we have to follow Accounting Standard 26. Now come to the various method that we use to calculate the value of goodwill. There are three methods. First is average profit method, second one is super profit method, third is the capitalization method. Under this capitalization method we will study two more method: capitalization of average profit and capitalization of super profit. All the three methods we will discuss one by one with illustration how you will calculate the value of goodwill by using various formulas. First of all, average profit method. Under this method, normal business profit earned by the business for the specified period of years are considered. So for this you have to apply the formula average profit into number of year purchase. So first of all, first step you have to calculate the average profit. If suppose there is a profit given for 5 years, you just add the profit of 5 years and divide it by 5, you will get your average profit, and number of year purchase will be given in your question. See, what is the meaning of number of year purchase? It means the for which the firm is likely to earn same profit of same amount of profit after change of ownership because of the effort put in the past. Means in short we can say that number of year purchase refer to the expected profit. The same profit is going to be continue for coming number of year purchase, that will be given in your questions. See, this is one of the illustration given based on this method. Hari and Krishna were partner in their profit sharing ratio 2:1. They admitted Shyam as, because as we have already discussed, in case of admission we have to calculate the value of goodwill so that we can charge the goodwill upon the new partner when he is coming to into the firm. For this purpose, the goodwill of the firm is to be valued on the basis of 3 years purchase. That is, number of year purchase given in this question is 3. Means this same profit, it is expected that this profit is going to be continue for coming 3 years. Means this situation is going to be continue to be same till up to 3 years. Here the list of profit is given in 13, 14, 50,000, 14, 15, 40,000, 15, 16, 75,000, 16, 17. Here the profit is given in the bracket. That means in this year firm suffers loss. 17, 18, 50,000. And the in 14, 15, after charging 10,000, this abnormal loss, this profit is coming 40,000. So what we have to do, we have to add this abnormal loss to the 40,000, then your profit you will consider it as 50,000. See how you have calculated the average period. You just add the profit of all 5 years, but you must be careful. Abnormal loss should be added back to the profit. Then you consider in 2014 50,000 profit, not 40,000, and this 25,000 loss is deducted from the total profit. So your average total profit is 2 lakhs, divided it by 5, you will get your average profit 40,000, and then you apply the formula average profit into number of year purchase, that is already given in 3. Then you multiply it 3, you will get the value of goodwill by average profit method. Now come to the next method, that is super profit method. Super profit means excess of average profit over normal profit is known as super profit. Super profit, how you will calculate the goodwill? Super profit, first you have to calculate the super profit and then you multiply it by number of year purchase. See, here illustration is given. Alok and Akash are partners. They admitted Ashish with effect from 1st April. They agreed to value goodwill at 3 years purchase of super, number of year purchase given 3, and you have to apply the formula of super profit method and average profit of last 5 years. Again, see, in 2016 profit it is showing 2 lakhs, but in this 2 lakh 25,000 is your capital profit. It is included. So what we have to do the adjustment, you have to deduct this 25,000 from the 2 lakhs. And in case of 2017, 1,70,000 and abnormal loss is 50,000. You have to add this abnormal profit to make the profit of 2017, and capital employed is 15 lakhs, and it is expected that what is the normal rate of return it is expected, that is 10%, means expectation of businessman is 1,50,000, but what actually firm is giving, see here we have calculated our average profit by adding the profit of 5 years, that is 10,85,000. What adjustment is required, that we have already made, 25,000 is deducted and abnormal loss is added, and then we get the average profit 2,17,000. And then in the second stage you have to calculate the normal profit, that is 15 lakhs, 10% of 15 lakhs is the expected profit, and actual profit is 2,17,000. It means your expectation, firm is giving more than your expectation. Super profit is equal to actual profit minus normal profit, that is 2,17,000 minus 1,50,000, that is 67,000. And now you apply the formula super profit that we have already calculated in third step into number of year purchase, that is the value of goodwill by super profit is 2,01,000. So it means you have to follow 4 steps. First is to calculate the average profit, second step to calculate the normal profit, third step that is to calculate the super profit, and at the fourth step you just apply the formula to get the value of goodwill. Now moving to the next method, that is capitalization method. Under capitalization method, goodwill can be calculated by 2 methods. First is capitalization of average profit and second capitalization of super profit. Capitalization of average profit, goodwill is calculated by deducting capital employed, what actually you have invested into the firm and what you supposed to introduce to earn the average profit. That difference we treat it as a goodwill. See how you will calculate, what formula you will apply. Goodwill is equal to capitalized value minus net asset. How you will capitalize your value, capitalized average profit, take average profit into 100 by rate. You just see it with the help of illustration. Punit and Tarun are in restaurant business, having credit balance in their fixed capital account 2,50,000 each, and current account balance they have 30,000 and 20,000 respectively. Firm does not have any liability. They are regularly earning profit as their average profit last 5 years is 1 lakh. If the normal rate of return is 10%, then how you will calculate the value of goodwill? By capitalization of average profit. You just see what step you will follow. First you capitalize the average profit. How you will capitalize the average profit? Take your average profit into 100 by normal rate of return. So as per the question, average profit you have to already given in the question, 1 lakh into 100 by 10, that is 10 lakhs, means to earn 1 lakh you have to invest 10 lakhs rupees. But what actually you have employed, see, by adding all the balance, fixed capital balance and current balance, actually capital introduced into the firm is 5,50,000. Then see the difference. Goodwill is equal to 10 lakhs minus 5,50,000, that is 4,50,000. We will treat it as a goodwill. So this is the way how you will calculate. It means you have to follow 3 steps. First you capitalize the value of average profit. Second you just find out the what actually the capital introduced, and in the third step you will just get the difference of first minus second, that is 4,50,000. So this is the way how you will calculate the value of goodwill by capitalization of average profit. Now next is capitalization of super profit. Again, in this case, you have to capitalize your super profit, that we have already discussed how we will calculate the super profit in super profit method. Under this method, goodwill is calculated by capitalizing super profit at the normal rate of return. And already we have learned how to calculate the super profit, which is capitalized at a normal rate of return to determine the value of goodwill. Formula, you will apply super profit into 100 by rate. That is capitalization method, that your normal rate will be reversed 100 by whatever rate is given in the question. See now the question. Average profit is given 1,50,000, tangible assets 14 lakhs, outside liability 4 lakhs, and in same type of business normal rate is expected 10%. So first step, what capital is employed? This is calculated by net assets, all assets minus outside liability, that is 14 lakhs minus 4 lakh, that is 10 lakhs, and normal expectation is capital employed into rate already given, normal rate, that is 1 lakh. This is the normal profit, and already in the given question average profit is given 1,50,000. In the fourth stage you have calculated your super profit, that is average profit minus normal profit, that is 50,000, 1,50,000 minus 1 lakh. And now at the fourth step you are applying the formula super profit into 100 by rate, that you are capitalizing the super profit, and then you will get the value of goodwill, that is 5 lakhs. So this is what the way, various steps you just follow, and you just calculate the value of goodwill. So based on this topic, I have already given you the assignment, 5 questions each on all 3 methods. On average profit method 5 questions, on super profit method 5 questions, and on capitalization method I have given you 5 questions as an assignment. You just do it in your accounts copy. This is all about this topic. Thank you so much.